Earnings season is in full swing with companies reporting solid results as the Reserve Bank repeats that rates won't change this year. National Australia Bank warns on bad loans and the spring selling season nears. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Monday, the 19th of August 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, almost 1/3 of companies on the ASX have reported their June earnings. And with results slightly better than expected, the bourse has lifted, supporting Reserve Bank confidence that the economy is still chugging along.
It's always interesting to check out what's happening on Main Street, what the earnings are saying, versus what the economists are saying. And they're kind of in sync at the moment. Thus far, there have been fewer surprisingly strong results and fewer surprisingly weak results, at least compared to normal. Consensus expectations are for a 3.6% drop in profits for the last financial year. The energy sectors where a lot of that will come from. Also smaller falls in mining, consumer staples, IT and financial sectors. That's according to AMP's Shane Oliver. But there have been some strong results already. JB Hi-Fi was an example. Commonwealth Bank was another. There's also been signs of a slowing economy with consumer spending and media companies demonstrating weakness. Also, the online property players, Domain and REA, have reported higher levels of listings, which might reflect housing distress, while the Commonwealth Bank and National Australia Bank both reported a jump in loan arrears. Nothing too serious, but certainly worthy of a note. There's still a bit of oomph in the economy, though. I think that's the bottom line here. And the Reserve Bank, that's a technical term, oomph.
between oomph and still chugging along, we're really kind of redefining economics.
You know, I think economics is created by a bunch of people using jargon that no one understands. So let's, have a little campaign here. Oomph, chugging along.
Yep.
It really is. The Reserve Bank thinks that as well. On Friday, Governor Michelle Bullock repeated that interest rates are not going to rise or fall anytime soon, saying current rate settings appear likely to bring inflation down to a manageable level. She said it's premature to think about rate cuts because services inflation remains too high. While she understands many households would like to see a fall in interest rates, she says the alternative of higher inflation for longer is much, much worse.
Which is a fairly consistent kind of narrative. She's been saying that for a very long time now.
Yeah, and I think the earnings results are more or less supporting what she's saying.
Okay. So the local market, Sean, is doing well, clearly. What about overseas?
Last week was a cracking week for equities. In fact, for many markets, the best week since November last year. Global stocks rebounded, volatility eased, investors just became a bit more confident that the US isn't heading for a recession. Wall Street's S&P 500 index broke a 4-week losing streak to close the week up nearly 4%. The gains left the blue chip benchmark just 2% below its record high, which was reached a month ago. Japanese stocks, which really bore the brunt of the global sell-off at the start of August, surged 3% on Friday alone. For the week last week, they were up 8%, while the stocks Europe 600, the top 600 stocks in Europe, closed the week 2.4% higher. The MSCI World Index of Global Developed Markets stocks also had its best week since early November. Investors basically are now confident that the global economy is coming in for a soft landing, and particularly the US. No recession, just weak growth. And that would actually be the best outcome possible from higher interest rates.
Sean, I know we do our bonus episode of Fear and Greed, Ask Fear and Greed, it's called, every Tuesday and Thursday, where listeners are invited to ask any question of you at all, and you'll do your best to answer it. I'm just going to ask you a little spontaneous, impromptu one.
Oh,
the
excellent.
MSCI World Index of Global Developed Market Stocks. What is that? What is it? Like so
MSCI is, I'm going to get the acronym wrong, so I'm not even going to try it. It's kind of the organization that manages to collect all the data on a bunch of stocks and says this is what's happening. Now, the MSCI World Index of Global Developed Market Stocks is exactly as it says, global developed market stocks. I think UK, think US, think Australia, think New Zealand, think a bunch of places in Europe. Not so much the emerging economies, China, Latin America, those economies aren't in it. So it's just the developed, put all the stocks together, work out, where they're going up and down, and you come up with the MSCI World Index.
Okay, so it is essentially a full global or a representative global index.
Yeah, rather than the ASX,
Yep.
It's the equivalent for developed nations.
Okay. All right. There we go. Learned something there. And if you have your own question for Sean, feel free to send it on through via the website, fearandgreed.com.au, or via any of our social media platforms. Sean, after the show, you've got an interview coming up with Ben Gilbert from Jarden Australia.
Yeah, sure do. Ben is talking to us about how some of the big stocks have gone, particularly Commonwealth Bank. We talked to him about that. But some of the ones coming up, and then we also go into stocks like Domino's and the travel sector, and just given the timing where we are in earnings season, it's just a fantastic chat. And Ben knows so much and is a great communicator, so it's well worth a listen.
Yeah, indeed. It's coming up after the show. Now, we've talked a lot about local markets. Just quickly on the numbers, how did things finish up on Friday?
The S&P ASX 200 finished up 1.3%. Very good day to 7,971 points, led higher by energy and materials companies. The financials and tech stocks did pretty well also. It's been 6 sessions of gains in a row. Pretty good. Benchmark's up 2.5% last week.
Yeah, not bad at all. Now, globally, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. You mentioned equity markets. What else is happening on international markets?
Gold's had a great run, hitting a new record high of $2,500 per ounce over the weekend. With so much uncertainty out there, investors want to put some of their money in safe haven assets, and gold is as safe as it comes. It also helps that investors expect rate cuts in the US next month. Gold tends to do well when rates are falling. Gold's now up 20% this year. Otherwise, Brent crude's trading under $80 a barrel. We're experiencing some of that benefit at the petrol pump. Did you get petrol on the weekend, Michael?
No. So that would make sense if it's falling at the moment and lower at the moment. So I would have missed that. Yeah.
Probably higher later in the day when you go, but very, very affordable petrol at the moment. Iron ore's trading around $97 a tonne. It hasn't consistently been below the $97 level in about 4 years. Now, we can't say it's consistently. I mean, it dipped late last week, iron ore prices, but if it stays here, it really will be underperforming the previous 4 years. Now, the period before that, it was always under this level. I suppose we need to keep that in mind. The point of this is that the weakness will have flow-on effects for the federal budget. If iron ore remains at this level or even lower, it's very hard to see the government announcing a surplus anytime soon. And also the Aussie dollar's up a bit. That's on the back of all these expectations of US rates falling and Aussie rates staying the same. It's trading just under 67 US cents.
It is extraordinary, isn't it, to think about the importance of iron ore for Australia, that dip in prices has such a flow-on effect to the Australian budget, to the Australian economy, and then to the federal budget, that is just one commodity, albeit a very, very kind of valuable one for Australia.
Yeah, so the government earns taxes, generically I say that, taxes from iron ore exports because, company tax rates and royalties and things like that. They have priced in, the federal government I think it's like $70 a tonne. So when it's higher than that, it just means that they've underestimated what they'll get in tax revenue from iron ore. Now, 97 is still a long way above 70, but at 120, they were really reeling it in. And that's kind of probably the most important reason why we've had 2 budget surpluses in a row.
Oh, there you go. All right, we've got a bit to cover, Sean. We'll be back in a moment with the rest of the day's business news. Sean, National Australia Bank has warned that interest rates and persistent inflation are hurting customers with delinquent loans rising in the June quarter.
Yes, in its June quarter update, the country's second largest bank said non-performing loans had risen to 1.31% of the book compared to 1.2% at 30 June. Doesn't sound like much, but it's a 10% increase. That is significant. It reflects a continued broad-based deterioration in business and private banking, according to NAB, combined with higher arrears for the Australian mortgage portfolio. Chief Executive Andrew Irvine said he was unsurprised by the increase and the bank had set money aside for it, adding it showed that the economic environment is challenging for customers. National Australia Bank, which is a September 30 balance date, reported a third quarter profit of $1.75 billion, which was flat. The lender is growing its mortgage book slower than its competitors and has been unseated as the number 3 mortgage bank by ANZ because, of course, it now owns Suncorp Bank. NAB's share price finished 1.6% higher on Friday.
Sean, I mentioned at the top of the show that the spring selling season is almost upon us and the number of auctions is picking up with preliminary clearance rates almost hitting 71%.
I like this time of year, right? We're coming to the end of winter. That's good. Earnings season is happening. We're about to get into the spring selling season. There are a lot of people who make or break their year in the spring selling season. I always remember in newspapers land, if we had a good September, October, November, then you're going to have a great financial year. But if you had a bad September, October, November, you could never catch up. And that's because all these people were putting ads in for property sales, particularly commercial. Anyway, I digress. Anyway, the number of auctions over the past week was just short of 2,000, the highest number since June, with the jump in the overall preliminary clearance rate being driven by Sydney, which came in just under 75%, according to CoreLogic. Melbourne's clearance rate came in at just over 67%, while among the smaller capitals, Adelaide led the way at 84%, Brisbane was 63%. But it's really, sort of pre-season, with the number of houses going up for sale rising next week and then the following week. And then once we get into September, October, we'll really know what's going on in the market. CoreLogic figures show that the number of new listings is tracking higher than last year, and it's about 11% above the 5-year average. This comes back to the idea that perhaps it's going to be a buyer's market in the spring selling season rather than a seller's.
Yeah, we had a great chat last week, didn't we? To Nicola Powell from Domain, who was talking about the fact that, yes, this looks like it could be the best season for buyers in at least a number of years.
Yeah. It's really interesting.
Yeah, well worth going back and having a listen to that one. Now, Sean, ASX Limited, the organisation that runs the securities exchange, reported a slight fall in profit on Friday on the back of higher regulatory expenses.
Yeah, so remember the ASX last week got hit with a federal court case brought by the Australian Securities and Investments Commission, ASIC, about alleged misleading statements over the replacement of its CHESS system. So the CHESS system, along with updates to core systems and the need for more staff to address regulatory demands, is really putting pressure on the exchanges, ASX Limited's bottom line. Chief Executive Helen Loftus said the ASX was carefully reviewing and considering the allegations from ASIC from last week, while remaining committed to taking ASX forward. She said the markets and data businesses had increased revenue while listings income had fallen, though Ms. Lofthouse said there were signs of a return in IPO activity. She used the Guzman y Gomez as an example. ASX's share price finished flat.
Domino's Pizza, Sean, has found a new boss of its local operations, and it's the CEO's sister.
It does make you wonder. But she does come with some pretty decent credentials. Kerry Hayman is her name, the sister of Don May, will take over the Australia and New Zealand part of the business. Mr. May had been living in the US before moving home in the middle of last year to help run the struggling local operations. Now he's heading back to look after the overseas part of the group, which has been having its own struggles, particularly in Japan and France. Ms. Hayman is certainly no novice. She has spent 36 years in the business, initially working for her brother when he was a store manager. Since its peak in 2021, when COVID restrictions were encouraging people to order pizza, Domino's share price has gone from about $160 a share to about $33.
That's pretty impressive to have spent 36 years within the business.
Yeah.
Gosh, you would have to know it well.
Yeah, totally. And Don May, the CEO, obviously the same. It's pretty incredible.
Yeah, great depth of knowledge. Sean, speaking of knowledge, here's a good trivia question. I don't even know if it's a trivia question as such, because I'm going to tell you the answer. The best investment class over the past 30 years, is it local shares, international shares, or bonds? The answer, not even giving you a chance to answer it, the answer is Wall Street.
An investor who put $10,000 in the S&P 500 on July 1, 1994 would have earned $237,000 by June 30 this year, according to analysis by Vanguard Australia for the Financial Review. That's an annual return of 11.1%, compound that is, and a total of more than 2,200% over the whole time period. The same amount invested in the S&P ASX All Ordinaries Index in Australia would have grown to 135,000. So remember, it's 10,000 in, 237,000 out on the S&P 500. Locally, the S&P All Ords, 135,000 out. That makes Australian shares the second best performer over 30 years. Plenty has gone on in that time, from the Asian economic crisis, dot-com boom and bust, terror attacks, GFCs, debt crises, the collapse of Lehman Brothers, COVID-19, of course. Next best on the list was international shares. Interesting that the ASX shares outperformed international shares. Then Australian listed property, then bonds, and then cash. All assets outperformed inflation, which you would want them to.
Sean, we've already covered a few different results, but there are a bunch of other earnings that we should talk about. Online property group Domain posted a 63% jump in net profit.
That was built on an 18% rise in average revenue per listing and growth in its unique audience. The number of listings on Domain was up 4% during July. The group declared a final dividend of 4 cents a share, taking full-year payout to about 6 cents a share, flat on the prior year. Emcor, the world's largest consumer packaging company, says there are some early signs of a small upturn in demand from customers as a destocking trend in inventory comes to an end. Basically, people ran down their stock. Therefore, they didn't need the packaging that went around all the goods that they were buying. Emcor runs 210 packaging plants in 43 countries, making pouches, wraps and containers for food, beverage and healthcare customers. The destocking phenomenon had cut its bottom line by 27% last financial year. Finally, one definitely worth a mention, GQG Partners. Most of us don't know much about GQG Partners, Fort Lauderdale-based, reported a surge in funds under management in the first half of this year, reflecting strong investment performance. Inflows jumped by nearly $17 billion, and the company's share price is up more than 60% this year.
Okay, turning to international news now, Sean, Kamala Harris fronts the Democratic National Convention this week, effectively introducing her to millions of voters who haven't been engaged in the race for president yet.
It's 80 days till Election Day, and most of Ms. Harris's public statements so far have been focused on the personality fight between her and Donald Trump. Over the weekend, she did start releasing policies. One cracked down on price gouging, another was about subsidies to boost housing supply. Both received a mixed response, is probably the best way of putting it. The convention this week will very much set the tone for whether the election is actually more about personality, where Kamala Harris is actually doing pretty well, or policy. And the Republicans tend to hold their ground when it does come to policy. President Biden will give a major speak on Wednesday, our time, in what will be a symbolic handover of the Democratic nomination to the vice president. Once this is done, we officially have the two candidates in place, and it's full speed ahead till early November.
Then away we go. As if it hasn't already felt like that so far, Sean, hasn't it? It's been such theatre to watch up to this point. Yeah. Such theatre. Makes me sound so cultured, doesn't it? Speaking of culture, X has vowed to close in Brazil, Sean, over what it alleges as censorship as owner Elon Musk ramps up his political activism.
Yeah, it all sounds very familiar. In a post on X, the social media company alleged that a judge threatened its legal representative in Brazil with arrest for not complying with a secret order to take down certain accounts. A letter attached to the post, which X said was the court order, instructs the individual to implement the measures within 24 hours or risk a fine and imprisonment. The court said neither it nor the judge would comment on the matter, but X said as a result, to protect the safety of staff, it will close its operations in Brazil effective immediately. Now, Musk, a self-declared free speech absolutist, has increasingly sided with right-wing politicians globally over this year, throwing his support behind Donald Trump, championing Argentina's populist leader Javier Milei, and according to the Financial Times, he recently attacked the UK government for its handling of anti-immigration rioting. He's also traded barbs with Venezuela President Nicolas Maduro, resulting in the platform being blocked in that country for 10 days. Now, we had this uproar a few months ago after a stabbing in a church in Australia. It's very interesting just to see Elon Musk taking on governments around the world, really.
Indeed. Now, up next, Sean, is Fear and Greed, the week ahead. And it's a relatively quiet week, but I think our resident economist, Stephen Koukoulas, actually needs a quiet week after the flurry of economic data releases last week.
Yeah. We talk a lot about last week and where we stand, just as Stephen, in the next couple of days, jets off overseas, in fact. So he's pretty excited about that, but he's even more excited about things like what Andrew Hauser, the Deputy Reserve Bank Governor, said about economists, about what Michelle Bullock said about interest rates. Definitely worth a listen.
Yeah, he's a great explainer of all of these things. Also a great explainer, Ben Gilbert from Jarden Australia, who is your guest today on the Fear and Greed Daily Interview.
That's right. We nominate a few stocks. Well, he nominates a few stocks and we talk about their prospects, including, Domino's, some of the travel companies and a bunch of retailers. In fact, JB Hi-Fi, for example.
Yeah, so 2 good things to have a listen to, both coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And a quick reminder to sign up for the Fear and Greed newsletter coming out on Wednesday. You do that at the website as well. Do it today and you don't have to think about it ever again. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 19th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.